What's up guys, welcome back. I'm Mike.
And I'm Brit.
And a couple months ago we made a video revealing our entire $110,000 investment portfolio where we broke down all three of our investment accounts, the stocks and ETFs we held in each, and our goals for each account.
Some of those stocks have performed really well and others not so much. So today we're going to be talking about the two worst performing stocks we bought into, how much money we lost, and do we plan on selling them or not.
So if you like videos like this or enjoy watching people talk about how much money they're losing, make sure to smash that like button and subscribe if you want to as well. It helps out our channel a lot, and with that being said, let's get into it.
And the first company we want to talk about is in the tech space, and more specifically, computers and gaming, and that is Corsair. They develop computer components and peripherals, and more recently they've gotten into the streaming sector.
So in terms of their internals, they make memory, power supplies, computer cases, CPU coolers, SSDs, and a bunch of more things. And if you've ever built a computer in the past, I'm sure you're at least familiar with their memory and their power supplies. I built many computers, and I think even in the one I'm using right now, I have Corsair memory and a Corsair power supply, and they've just been beasts. In terms of peripherals, they make keyboards, mice, mouse pads, monitors, chairs, ambient lighting, and a bunch of more things. And in terms of the streaming area they've more recently gotten into, they're making lighting, webcams, mics, and they recently acquired Elgato streaming software. They also have what's called a Stream Deck, which is very popular, very, very good from what we've heard. We don't use it ourselves, but we've been thinking about getting it for our YouTube channel. So as somebody who's built a number of PCs in the past and loves customizing PCs, I'm very familiar with Corsair hardware. It's some of the best that I have ever used and experienced. So just the quality of their components and their hardware is one of the largest reason Brit and I have invested in the company in the first place.
Yeah. So next, we won't get too much into the management of the company other than to mention the CEO is Andy Paul, and he helped co-found the company back in 1994. So Corsair's been around for a while. Before that, he had experience in the semiconductor space, and overall we think he's doing a good job managing the company.
All right, now into the numbers. So in terms of Corsair's performance, they have a $2.4 billion market cap, which technically puts them in the category of like a mid-cap company. If you define mid-cap companies as those who have between like a $2 and $10 billion market cap, at least according to Investopedia, that's how they define it. Corsair's forward PE ratio is 14.7 right now, which in our opinion is low, considering a number of things. The first reason being, if you look at the average PE ratio for mid-cap companies over the past 20 years, that is about 16.3 according to Yardeni Research. So if you look at Corsair, 14.7 forward PE, average forward PE for mid-cap companies over the last 20 years being 16.3, you see that Corsair is significantly below that. Also, something else you can compare Corsair to is in our opinion, their largest competitor, that being Logitech. Logitech has a 14.8 billion market cap, so they're in the large cap company space. However, their forward PE is 19.3, and Corsair's is still much lower than that. And we think eventually Corsair will become a large cap company. Mm-hmm. So just for these two reasons alone, we think Corsair may be undervalued right now.
And Corsair has had some great year-over-year revenue growth, especially in their gaming components category and their creator peripherals category, which has been about 25% year over year. Also, the same has been happening with their profits.
That being said, if you look at their month-over-month graphs, it shows a little bit of a different story. The revenue comes to a peak in Q4 2020, and ever since then, it's been on a gradual decline. They also missed their most recent earnings by a little bit, and their margins have also more recently been negatively affected due to increasing logistical costs, which is more than likely due to all the supply chain issues we've been experiencing for a while.
Also, when it comes to share price of Corsair, it's been down quite a bit from its all-time high in November of last year, where it was $51 per share. It's also had some trouble breaking over $34 to $35 per share since March.
Yeah, it's down even more than that more recently. So if you go back and look at, I don't know, like a 3 or 6 months time period starting in March, you'll see that the price is kind of go up to $34, $35, and then go back down a little bit, then go back up and down, and it's kind of flat lines around, I don't know, between $31 and $35. Just from the research that we've done, we believe this is the case due to an investing firm called Eagle Tree Capital. So Eagle Tree Capital was one of the biggest investors in Corsair. I forget what the valuation was when they first invested in Corsair, but they initially owned a lot of the company. And I think their average share price per share is like $5 or $6. So they're going to do what any good investing firm does. They're going to make money. So what Eagle Tree Capital has been doing is they've been selling shares, I think at an average share price of around $34, $35 a share so far. And that's been putting downward pressure on the share price of Corsair. Now they still own, according to Seeking Alpha, they still own 57% of the outstanding shares of Corsair, which means they still have more shares to sell if their goal is to be a majority shareholder. Now that may not be their goal. They may just want to sell out of all their shares, I'm not sure. But if they want to maintain majority status, they have a little bit more to sell, and then more than likely we're going to see this downward pressure that has continually been on Corsair stock, it seems like forever, go away, hopefully.
So in terms of our numbers, we've invested $5,230.63, and we own 160 shares in total at an average share price of $32.69.
So if you take a look at the share price of Corsair today, you'll notice it's well below that. We've lost $1,016.23 on this investment so far, which is around 19% loss on our money, which is not good.
Yeah.
However, like I said before, we really think all this downward pressure on the stock price is going to go away, especially when all these logistical supply chain issues hopefully get straightened out, evened out.
So the next company we're bleeding money from is in the cryptocurrency space, or a cryptocurrency brokerage. They're similar to Coinbase, but they're a lot smaller.
And this is Voyager Digital. Ticker symbol VYGVF if you guys want to look them up. So they're a cryptocurrency brokerage right now, but they also have aspirations of just like becoming a fully fledged financial institution with debit cards and checking accounts, savings accounts, and the ability to buy and sell stocks on the open market. So they have very big goals for what they're doing. Also, to our knowledge, they have the most cryptocurrency assets and altcoins available to buy and sell out there in the market. So I mean, there may be other brokerages that have more.
Yeah, and they also keep adding more coins to their platform. They also have a coin of their own. And their CEO is Steve Ehrlich. He was the former CEO of E-Trade, and he has a ton of experience in the investment world and building investment apps.
This guy is on interviews and talk shows and everything like every other day. He's doing a great job of advertising his product. They're also like hiring influencers and things like that. I think they had a race car the other month, like at a NASCAR race or something. It was kind of crazy.
So in terms of Voyager's performance, they have been a growth machine, not only in terms of their stock price from this time last year, but also their user base and their assets under management. Voyager started their operation in 2018, and they were publicly listed in 2019. And they've been growing like crazy ever since then.
So Voyager currently has a market cap of $1.3 billion, which would technically put them in the small cap company category. Yahoo Finance analysts expected this company to grow over 14,000% in 2021 alone, and about 217% as of next year. Now, I think they may have been a little overtly ambitious for 2021, but I think they're also underestimating the company's potential for next year. They've experienced a 35% user growth month over month, which is insane. That's not year over year, that's month over month. They're increasing their user base 35% every month, which is crazy. Yeah. In terms of their assets under management, they had $150 million assets under management in Q3 of 2020. That increased to $1.7 billion in Q1 2021, and then that increased again to $3.3 billion in Q2 of 21, which means in under a year, they have over 22x'd the amount of money that they're managing, which is, again, like insane.
With all that being said, their stock price has experienced a significant decrease in its share price from its all-time high back in April.
Yeah, so back in April, they had a stock price of $29 a share. It has fallen almost 70% since then. This has fallen a lot, which hasn't been good for us because that's about the time we started buying into this company.
Yeah. So in terms of the amount of money we invested, we put in $3,507.05. We own about 200 shares at an average buy-in price of $17.54.
If you guys look at the stock chart right now, you will notice the share price of Voyager is maybe a little over $9 or so per share. Our average share price is about $17, so you can imagine we're underwater significantly on this company so far. We're down $1,656.93, 47.25%, almost 50%. So I'm not nearly as confident as I was with Corsair as to why Voyager's share price has been down so much recently. It's pretty much tanked ever since April. You know, with Corsair, there's a bunch of downward pressure because Eagle Tree Capital is consistently selling their shares. But with Voyager, it may be because their stock price isn't nearly tied to the price of Bitcoin as, say, like a Coinbase's stock price is. So Voyager doesn't make any money from, at least to my knowledge, from trading cryptocurrencies.
Yeah, so they don't charge you to trade on their platform that we know.
There's also a lot of FUD in the air regarding potential regulation of crypto brokerages and cryptocurrency itself, so that may play into this a little bit? I'm not really sure. Regardless, the share price is down quite a bit.
So will we be selling out of our positions anytime soon? And the answer is no. Not unless something crazy happened and for whatever reason we needed to take out the money.
We are still very bullish on both of these companies, both Corsair and Voyager. In our minds, these are long-term holds, and we also want to allow enough time for management to do their things and really see where these companies go over the next 5 years or so. That being said, we probably won't be buying any more shares in the near future, even though both stock prices are so attractive, and that's just because both of these companies are more like speculative plays for us, and we only have so much cash we can deploy right now. We don't have like $100,000 sitting on the sidelines. We have more like $5,000 or $10,000 sitting on the sidelines, and we'd rather, with this cash, be investing into companies like the Microsoft, the Apples, Googles, the Amazons out there that have been around for much longer and have much more solidified their position in the market and have a much longer track record to go on.
However, like we said before, these valuations are extremely attractive right now, and if we did have the money, we would be buying more right now.
And that's it, guys. Those are the two companies that we are down the most out of our entire investment portfolio. Even though we are very bullish on them, we are down a lot of money. Hopefully things will get better. My personal opinion is that both of these will like 4x at least over the next 3 or 4 years. So again, like we said at the beginning of the video, if you enjoy stuff like this, if you enjoyed the video, please give us a huge thumbs up. It helps out tremendously.
And you can also subscribe for more and follow us on Instagram at It's Meg and Brit. We post there every now and then.
Yeah. Thanks again, guys. We'll see you next time.
Bye.